Hello, everyone. Welcome back to Rice Finance. And I hope everyone had a good weekend. Well, it's Monday today, and so you know what that means. It's another Monday Market Chat. This is going to be the third episode on my channel. So let's dive right into it. Well, I don't know if you guys remember my last Monday Market Chat, but I said the market was going to consolidate, and man, was I right. Looks like a lot of consolidation. But let's dive into each stock to kind of see where that consolidation happened. Let's start with the Qs. So, as you can see, we're in Invesco QQQ. As you can see, over the week, it kind of consolidated. It didn't really do too much. It kind of stayed along that 50-day moving average. And it looks like it's going to stay around there as it's topping out on that RSI index. The DMA looks to also be sort of turning over, and the volume seems to be going down a lot. And if you look on the weekly chart of this, it seems to be topping out on that top Bollinger Band. Now, the market's looking, it depends on what you look at. The DMA looks like it wants to turn over. However, it's touching the top of the Bollinger Band. The RSI looks like it is kind of curling over. So again, I feel like we're going to be getting a lot more consolidation, and you might even see a little bit of a downward turn as you see these upper and lower Bollinger Bands curling in. That's sort of a sign of indication of lower volatility, which would mean a consolidation of the market. So I would expect to see some sort of a consolidation on the Qs between the 375 and maybe the 389 mark. So I would expect to see some sort of consolidation within those sort of two ranges for this upcoming week. Let's dive right into the SPY. Well, the SPY did sort of the same kind of movement. As you could see, it kind of consolidated, went up a little bit, and consolidated throughout the week. Again, it's sort of the same exact movement. On the daily chart, we have a RSI peaking out. We have the DMA, looks like it's screaming up a little bit more. So you might even see a little bit more of a pump upwards, but then again, I would expect to see some sort of consolidation. As you can see, it's sort of peaking out on that top Bollinger Band. We are seeing a lot less volatility, and we are seeing, however, the DMA indicating sort of a push forward. So it does look like the consolidation might end up, and same thing with the Qs. It does look like the consolidation might end up only lasting a couple weeks, and then expect to see some sort of a continuation of a bull run, maybe in a week or two. So same sort of movement for the SPY. I expect it to kind of hover around the 454 mark and I would assume the 444 mark. So I would sit around these and expect some sort of a consolidation with possibly a little bit more uptrend. There's a potential to go just a couple dollars up. I would expect to the 457 or 458 mark. So let's go right now into the VIX, which, as you are aware, if you aren't aware, this measures volatility. It did have an uptick today, a green day on the day, which indicates um, downwards market trends. On the daily, it looks like the DMA might be sort of turning over, so we might expect to see a bullish run on the VIX because, as you know, the VIX is kind of like the counter to the SPY and the Qs. So I would expect to see some sort of rising upwards push this week on the VIX, especially if we can continue to see the consolidation with the SPYs and the Qs. And if you look on the weekly chart, it looks like it's supposed to be heading downwards. So again, I would expect this movement to be sort of short, quick, but a little bit of a powerful movement, opposite of the Qs and the SPYs. And I'm assuming you're going to see the same thing with the gas. So XLE, as you know, is our oil company that measures oil in the markets. As you can see on the daily chart, it's looking to kind of make that upward. It looks like it actually did a little bit of a consolidation, and I wouldn't be surprised to see if we see some sort of an upward movement, possibly to the 87 marker this week. I would say maybe a little bit lower. You're seeing a little bit higher uptrend in the volatility, a little bit low on the RSI, and the DMA did kick over. So, like I said, I would expect to see some sort of move upward in gas prices. That means more gas prices, higher gas prices probably within these next couple weeks. And again, it does look to be in the downward trend on the DMA. However, I think it's more of a consolidation. I think it's going to sort of consolidate around this level, especially when it hits this bottom Bollinger Band. It looks like it's petering right off of that on the weekly chart, and I would expect to see the next couple weeks maybe some sort of a consolidation push to upward trend around the 87 to 88 marker. And I do expect this top Bollinger Band to sort of rail a little bit down and maybe go up and hit that in the next couple weeks. But for this week, I would expect some sort of a push upwards, just a little bit, not too much on the XLE. TLT. Now, TLT, as you guys know, bonds have been the talk of the century. These bonds have been ripping, ripping, ripping. Now, one thing I will say is eventually these bonds have to cool off. And I think when I was looking into it, I think it might end up being this week. And the reason for that is because it looks like it's hitting this mid Bollinger Band right here. It's kind of stagnant here. The upper Bollinger Band is coming across, and I don't know if you guys, I have a 200-day moving average on my phone. I don't have it on this chart, but it looks like the 200-day moving average is starting to boil down. So I wouldn't be surprised to see if this sort of takes a turn a little bit downwards, but then does its continuation, especially for this week, as it looks like it's starting to hit the upper Bollinger Band, especially with today's market. And I will say, if you look on the weekly chart, DMA is crossing over. So in the long run, I expect to see this to go a little bit higher, um, possibly even back to the 116 mark. I'm hoping to get back there. But I think in the short term, I would expect some sort of a consolidation. As you can see, volatility is high, starting to tick down a little bit, and the RSI is a little bit high. Crossover with the DMA might be some sort of a fake out. So expect for this week to see a little bit higher, maybe a little bit, another dollar or two to the $92 era, and then I would expect to see some sort of a drop or consolidation in TLT. So let's dive into our commodities. I'm actually going to switch this so that way we can go over there. Besides the oil that we did. So let's dive into silver. So silver had these drastic moves this week, upwards, all this pushing upwards. I think I said, I don't remember what I said last week, but I'm pretty sure I was bullish on silver. And as you can see, look at that. Blew right past all of the indicators. Blew right past the top Bollinger Band, the bottom. I would not be surprised to see this just screamed upward. This needs to consolidate a little bit. Blew way past its indicators. Again, as I said before, markets don't like to see the gapping. They like to see some sort of movements to fill those gaps. So I wouldn't be surprised to see a little slow day to consolidate. But again, if you look at the indicators, RSI is kicking upward, the DMA is kicking upward. However, it looks a little bit drastic on the DMA. And when you go to the weekly chart, looks like to be turning over again. But again, you see this huge gap here. This market's going to want to fill that. So I wouldn't be surprised to see if this thing goes back down to about the 22, 26 this week. So roughly around where it was before, and then sort of consolidate a little bit. But then again, the DMA is kicking up on the week, so I wouldn't be surprised to see if in the future this continues its bullish run. I'm very bullish on silver, given the way the economy is, and it sort of runs opposite of real estate. And I don't really cover real estate on this channel, but the real estate market has been kind of kicking over, and this is silver and gold. We'll go into gold now. Silver and gold kind of go the opposite of real estate. So when real estate goes down, silver and gold tend to go up. And we've been seeing a little bit of a very weak market, especially within these last couple days. I wouldn't be surprised to see if these banks are hiding their loan portfolios, because as you know, banks have their loan portfolios as assets in their books. And I wouldn't be surprised to see if they're just waiting to try and hold out to see to maybe make investors happy and sort of hide those books a little bit, because when they write down the loans, that's where they get their cash from. But I wouldn't be surprised to see in these next couple months the market actually dying and gold and silver kind of pushing upwards as they lead that trend. And again, gold did the same movement, so now we're in gold. Ticker symbol PHYS. As you can see this week, we did another roaring upward movement. The DMA crossed over, RSA crossed over. This thing really roared, but again, blew past all its indicators. I wouldn't be surprised to see some sort of a consolidation to bring back down. But again, I'm very bullish on these as I see these going upwards a little bit higher. But I wouldn't be surprised to see if it consolidates back down to the 1563 mark, and then maybe a continuation upwards. But again, in the long run, I foresee these gold and the silver to be pushing upwards. The volatility is down, however, indicating a little bit of a slowdown. However, I wouldn't be surprised to see this slowdown in volatility correspond with the VIX pumping upwards um, just this week, and then some sort of a continuation into 2 weeks from now. Let's go into wheat. Wheat got hammered. Wheat was down 2.34% today. Now, all of the food I've noticed, the commodities for food, the wheat, the corn, they seem to be getting hammered. And I think, again, these things kind of went up with the market, but now they seem to be going down without the market. So these kind of trade a little weird, is what I've noticed. However, the wheat market just been getting hammered, and I'm assuming that's due to the winter. For those of you who know that the wheat index is probably having a really bad winter. I haven't really been following the winter that much, see how bad it is, but I'm assuming that the estimation, probably because it's an El Nino year, which indicates more storms, is potentially driving this lower cost of wheat prices. Also, the fact that we had this huge COVID push upwards to the price of wheat, it needs to consolidate and needs to slow down way back in 2022. Um, so again, I don't foresee this coming back anytime soon. The indicators don't really see it. It did blow by the bottom Bollinger Band, so again, you might need to see a little bit of a consolidation, but I could see this continuing going down. And the same could be said for corn. However, in the after hours, you're seeing a 2.49% increase, so maybe some news came out that I'm not aware of. However, again, corn's kind of trading the same. You saw this huge blow up past the COVID crash in 2021 to the 2022 era. You saw a lot of people putting their money in as sort of a anti-inflationary period, but as people get more excited that the interest rates are going to come down, people get out of this market. It's kind of like an inverse with the bonds. So if you're bullish on the bonds, you want to be bearish on wheat and corn. If you're bullish on wheat and corn, you want to be bullish on the bonds. They kind of trade in sort of an inverse. So on the daily chart, you could see it did blow back did blow past its indicators. So I would expect to see some sort of an upwards push, but again, I wouldn't be surprised to see this continuation on the downward trend. So I think that's all the indicators we're going to cover today. But one key thing that I do want to say before we leave. Now, this might me being a little bit of a conspiracy theorist, but I'm a pattern guy, and for those of you who don't know, I like to see a lot of patterns. I notice a lot of patterns, and what I've noticed is whenever there is some sort of it almost looks like a guaranteed downwards trend, which honestly it looks like a guaranteed downwards trend this week. There's always some news that the Fed always comes out and totally flips it on its lid. So I just want to add in the preface, yes, it looks like the market is going to consolidate this week. It's looking like it might be a bullish or a bearish trend. It's looking like the VIX might kick up. But I just want to add in the fact that usually when it looks guaranteed, the Fed comes out and says some crazy nonsense to totally flip it the opposite side. So me being a conspiracy theorist, let's see if next week, if this week the Fed ended up saying anything crazy to potentially flip the markets to turning from a pretty much almost, I would say, almost guaranteed bearish position or bearish consolidation this week into some sort of a bullish consolidation. Let's just see what the Fed says. That's all I got to say for today, though. Thank you guys for tuning in, and we'll see you guys in the next video. Take care. Don't forget to hit that subscribe and like button down below. Have a good day.